That's was an important part of what drove this turnaround in the market when we came into January. It was not only valuation at 15 plus PE, but it was the Fed did their 180. And of course, when trade looked like it was going to be resolved, that was icing on the cake. So Fed is key.
So, I mean, do any of your companies have to be reevaluated after this week, Barbara? Because what we saw fundamentally change was the tariff rates did go up from 10% to 25% on $200 billion worth of goods. Affects semiconductors, affects auto parts, furniture, agricultural products. I mean, do you have to take a look at your exposure?
Well, you do, except that I think investors are still thinking this won't really happen. I mean, it's going to take a while to implement. And if you saw, the 10% tariffs have not had much impact. I mean, a big part of that was Chinese devaluation of the currency, their currency, which is already starting to pop up, and also the ameliorative effects of the tax cuts. But, you know, so that hasn't really shown up. And you're also, I mean, your own survey of CFOs are saying, you know, we're not so concerned about trade. So I think investors are starting to distinguish, yes, there are different areas we've got to look at, but we still don't know. So it's, in terms of the overall market, I don't think it affects the market fundamentally, unless we have a full-scale war.